Hello, this is Alexander Green, Chief Investment Strategist with the Oxford Club. And we got some more good news today on the coronavirus. You don't often hear a lot of good news when it comes to a pandemic. In fact, what the media seems to focus on is the number of confirmed cases and the number of deaths, both of which are regrettable news. However, Moderna, which was the first company to submit a vaccine for potential approval, has found that its vaccine is up to 95% effective, even better than Pfizer's, which was 90% effective. And to put this in perspective, the annual flu vaccine is only 40 to 60% effective. So this is very good news indeed, especially for all of us who've been trapped inside and unable to travel, unable to go to the office and congregate with other people. And it has big economic ramifications. When the pandemic in the early spring, it became obvious that it wasn't going to be able to be controlled. The stock market went into the fastest bear market in history and lost more than a quarter of its value. But as time went by, people began to realize that as bad as the pandemic is, it isn't going to last forever, and that science was at work with medical technicians and physicians and laboratory workers to come up with a treatment and a vaccine ultimately, and the market began to recover. The stock market is a forward-looking indicator. And so typically investors are looking out 6 to 9 months. Well, 6 to 9 months takes us well into next summer. And according to the Health and Human Services Secretary, Azur, we are going to have first responders and medical workers vaccinated before the end of the year, senior citizens vaccinated by January, and anybody who wants a vaccine can have one by late March or early April. So despite the media focusing on the very high confirmed cases and the sad number of people who've died from the virus, the outlook is actually getting much better. So when people are confused about how the market can be doing so well when the pandemic is at its worst state yet, the stock market is looking ahead and finding it's going to be less bad. And by the second half of 2021, things will be considerably better. So stay-at-home stocks, which is companies like Amazon and Apple and Netflix and Zoom and whatever, they've gotten a serious haircut over the last couple of weeks. And the so-called reopening stocks, the hotels, the restaurants, the airlines, the cruise lines, they've actually started to do much better. And so I would recommend that people stay invested in stocks and look for new opportunities because good things are happening despite the scary headlines. As I like to say, follow the trend lines, not the headlines. And the economic trends going forward are quite positive. So to hear more of my investment views, feel free to subscribe to my e-letter, Liberty Through Wealth. It's completely free, and you can just click on the link below. So I'm looking forward to sharing more of my investment views with you in the near future. Thanks so much.